What's up guys, welcome back. Today in this video we will discuss about the export under GST. How to do export under GST. You know that export is very important for every single countries on this earth because it gives them the foreign convertible, and you also know that it is very important for India also because we need the foreign convertible. So in this video we will discuss about the export under GST. But after the introduction of GST or on 1st July 2017, the exporter didn't export anything out of India because they didn't know how to do export, because the government didn't have any such clarification or the procedure of how to do export after introduction of GST. They didn't even have the rules for exporting goods out of India. It's a very shocking news. I also didn't have any idea about that. So when the person asked the question also on the GST ki master class, then also secretary come up with this idea or this kind of a knowledge that we didn't have any export procedure. So after that they come up with a lot of notification and circular, and in that now the date of recording this video is the 12th July 2017, and now we have the idea that how to do export. But a lot of exporter also don't know about the export right now, and they are scratching their head, and their head is revolving like this fidget spinner. So I know that you don't know about the how to do export under GST, so therefore you are here in this channel because you want the quality content, and you will find the every single practical aspect relating to how to do export under GST. Every single aspect. Am I bragging myself? Hell no. You will get the every single practical aspect relating to the export under this video. And if you have any query or you want further clarification regarding that, then you can mail me on my personal mail ID, which is the sherwan.gst.148@gmail.com. If you have any kind of a question regarding the export, then you can ask me or drop me an email because you are exporter and you need the procedure. Alright guys, so in this video we will divide the whole video into the 6 different clips. So we will discuss in every single clip the every single different topic relating to the export, but like the notification circular which the government has come up after some time of days. So now first clip will be about section number 16 subsection number 3 of IGST Act and section 54 subsection 3 of CGST Act. 16 subsection 3 is relating to the IGST Act, which is relating to the zero rated supply and what exactly are the options which the exporter have, like whether they can export without payment of IGST or whether they have to pay the IGST and then claim the refund. We will see it under 16 of IGST Act. And then 54 subsection 3 is regarding the refund of input tax credit when you are exporting your goods without payment of duty or with payment of duty. We will see it in the section 15 subsection number 3, section 54 subsection 3 of CGST Act. And then we will discuss about rule number 96 and 96A of the refund rule. Here we will discuss like how to get the refund of input tax credit, and also how you can export your goods without payment of duty under letter of credit or the bond. 96A come up after when the people don't have idea that how to get export. So therefore that is a amendment which was around like 7th July 2017. So you can get the idea that at that time the government didn't have any idea of how to do export. They didn't come up with certain clarity of rule. So after the people told them that we didn't have any idea that how to get export, then only government amend the rule and they provide the rule number 96A in the refund rule so that the people can clarify that what exactly is the procedure. Then we will discuss about notification number 16 of CGST Act, which was notified on 7 July 2017. We will discuss about it. And then circular number 2 in CGST, which was circulated on 4th July 2017, then circle number 4 in CGST, and then the circle number 26 in customs, not in CGST or IGST or other kind of stuff. In the custom notification circle number 26 is also there in the custom, which give you the idea that how to get how to do the export in case you want to export out of India of your goods. Alright guys, so we will discuss about every single practical aspect of how to do export, and if you have queries then you can send me the email on sharvangst.148@gmail.com. So without any delay, let's start. Now before to find out what exactly is the procedure of export under GST, we should first discuss about the legal background relating to the option available for the exporter under GST, and also how or in which situation they can claim the refund of input tax credit under GST. So now the first one about the section number 16 of IGST Act, not the CGST Act but the IGST Act. So in that section there is a chapter which is relating to the zero rated supply. So export is zero rated under GST. Is zero rated under GST. Export is not exempt but is the zero rated under GST. Exempt and the zero rated is very different concept. So it might be a case that your goods is taxable at certain kind of a rate, but if you want to export that you can take, or that product is the zero rated under GST if you are exporting. Also if you are selling the goods to the SEZ unit or the SEZ developer, then also you can say that your supply is zero rated under GST, and that is provided under section 16 of IGST Act. And then the another section, which is the section number 16 subsection number 2, says that credit of IGST can be availed even if your product is exempted under GST. So suppose your product is exempted under GST because it is nil rated, then also you can take the input tax credit of the input used for arising or for use for manufacturing of that exported goods. So because we know under GST if your goods are exempted then you cannot take the input tax credit of those items, but because you are exporting your goods out of India and because you are generating the foreign revenue, foreign currency of India, and the government want that everything should be cheap. So in order to make the cheaper product, every tax should be refunded. So therefore the government said that even if your product is exempted, you can take the input tax credit of the item used for manufacturing or for dealing with or for using the trading goods out of India. And also under that you can take the input tax credit of all the item, but subject to section number 17 subsection number 5 of CGST Act, which restrict for taking the input tax credit on certain item. So you have to check out before taking the input tax credit of section 17 subsection 1. So because in section 17 subsection number 5 there is certain kind of a inputs on which you cannot take the input tax credit. So if that item is contained in section 17 subsection 5, you cannot take the input tax credit of those input. But if that input is not in section 17 subsection 5, then you can take the input tax credit of those items even if your final product is exempted. And then the exporter has the two option under section 16 subsection number 3. Exporter has the two option to export the goods out of India. So because we know that the supply of the export is also a supply, we know that export is also supply, and we know that the GST is on the supply of goods or services and we should pay the tax on it. But because government want to make the product cheaper, so therefore they want to refund every single taxes which you paid on your final product or on the input used. But the government also want some kind of security, some kind of safety, or some kind of a procedure to make sure that the product is exporting out of India. So for checking or for ensuring that you are exporting your product out of India, they have the two option. They gave you the two option in which you can export your goods out of India. First one is that you can export your goods out of India without payment of duty, and in that case you have to furnish either the bond or the letter of undertaking to the government or to the President of India. You have to furnish the letter of credit or the bond to the government of India if you are exporting your goods out of India without any payment of duty. And with respect to the input tax credit which is used for exporting the goods, you can refund that input tax credit under section 54 subsection number 3. So that is the first option. Second option, that you should pay the tax, you should pay the IGST on the exported goods, and then after exporting out of India you can claim the refund of IGST paid at the time of export. So there is two options. You can export without payment of taxes and then use or refund the input tax credit used at the time of exporting, or you have the option to make the payment to the government when you are exporting and use the input tax credit and set off that export input tax credit for the liability of paying the IGST at the time of export, and then when you pay the IGST then come up with the government and say that I have exported that goods, now I want the refund of the amount which I paid at the time of export. So there are two options, either without payment of taxes and on the payment of taxes. Two option is there under section 16 subsection number 3, and then section 15 subsection number 3 of CGST Act talks about the refund of input tax credit which is used for manufacturing or for use of exporting the goods out of India. They says that you can take the input tax, you can take the refund of the input tax credit, you can take the unutilized input tax credit which is there in your books of account if the export made is without payment of taxes. So you can take the refund of input tax credit only in case you are exporting your goods without payment of tax. Remember that you can take the refund of input tax credit only at the time or only in the situation when you are exporting your goods out of India without payment of duty. And if you are exporting your goods with the payment of duty, or you have paid the taxes, you have paid the IGST at the time of exporting, then you cannot take the input tax credit refund. Why it is so? Because in case you paid the IGST at the time of export, then you can set off your input tax credit with the output liability of IGST in case of export. So therefore, if you are paying the tax at the time of export, then you can set off your input tax credit with the output liability. But if you are supplying your goods without payment of duty, so it means that your input tax credit is unused, so therefore you can claim the refund of that unused input tax credit under section 54 subsection 3. But also there is one more situation in which you cannot take the input tax credit, you cannot take the refund of input tax credit, and that is when you avail the duty drawback of the central taxes. So if you are availing the duty drawback of the central taxes, then only you cannot take the refund of input tax credit. So duty drawback, I don't want to touch the duty drawback here in this video, but if you have the question regarding the duty drawback, then you can send me an email to sharwangst.148@gmail.com. I will give you the answer. And also one more important point here, that a lot of people are asking me earlier that whether the duty drawback scheme is similar. So now I want to tell you, I want to clarify you that the duty drawback scheme which was there under section 54 or 6 or 74 or 75 of the Custom Act is the same for the 3 months, from the 3 months up to 30th September, July, August, September, up to 30th September 2017. The scheme regarding the duty drawback is similar, but there is also some kind of a modification in the duty drawback scheme. So if you want to know about it, then ask me that in the mail. I will not touch about the duty drawback. So if you are availing the duty drawback of central tax, then also you cannot take the input tax credit of refund of input tax credit, because in case of a duty drawback also the government provides you the refund in form of a duty drawback. So therefore you can take the refund of also input tax credit and also the duty drawback. So therefore, in order to safeguard that you cannot take the two refunded, so therefore they provided here that if you avail the duty drawback of the central tax, then also you cannot take the refund of input tax credit which is used for manufacturing the exported goods or for making the trading, you can say, of the exported goods. So that is the first clip. In the second clip we will discuss about the rule regarding the export under GST. So now we should discuss about how to get the refund out of the department, because you know that you are doing the export because of the money and you need the money and you need the refund of the taxes paid either on the input or the taxes paid at the time of export. So The refund rule talks about the how to get the refund under GST in case you are doing the export, and rule number 96 and rule number 96A discuss about the refund of the export. So rule number 96 is for those people who exported the goods with the payment of duty, with the payment of taxes, with the payment of IGST. So if you paid the tax at the time of export, if you paid the IGST at the time of export, then you have to check out the rule number 96. And if you didn't pay the tax when you export the goods on the bond or the LUT, and now you want the refund of the input tax credit of the input used for doing the export, then you have to check out the rule number 96A of the refund rule. So now rule number 96, first we will discuss about rule number 96, and it is applicable on those people who have exported the goods with the payment of IGST. So now how to get the refund of the taxes or the IGST paid at the time of export. Now the first one is that the shipping bill which you file at the time of export will be deemed as an application for refund under GST. So the shipping bill will be deemed as an application for the refund, and it will be deemed that you have filed the application for the refund only if the person in charge of conveyance, duly submitted their export report or the export manifest to the custom department, and you file the return in GSTR 3 or GSTR 3B. So the refund application, so first of all, we know that if you want to refund, then you should file an application. So in case you have paid the taxes at the time of export, then the shipping bill will be considered as a refund application, and it will be considered that you have filed that application only if the person in charge of conveyance have duly submitted their export report or the export manifest to the custom department, and you have filed the return under the GST return like GSTR 3. And also when you file the GSTR 1, which is regarding the detail of outward supply, you have to mention your export turnover into column number 6 of GSTR 1. So when you enter the column or when you fill the table number 6 of GSTR 1, which is regarding the outward supply, then that column, the data of that column will get transferred to the custom department, to the software of the custom. So custom department will also check out that data with their report, because you know that the custom department has also a lot of information about the export. So when you fill out the GSTR 1, which is regarding the outward supply, then the custom department will check your information with their data. So when the both are matching, then they send the confirmation that yes, that person has exported that goods which they have returned in GSTR 1. So when that confirmation will get, then only you can get the refund of the taxes paid at the time of export. So you have to first fill up, or you have to first file GSTR 1 and also GSTR 3. So when the data in table number 6 of GSTR 1 will match with the data of the custom department, so then also they will send you the confirmation, and then also that will, the amount of tax which you paid at the time of export will be transferred, will be credited into your bank account automatically. So that is the process. When you pay the tax at the time of export, then you have to fill out the table number 6 of GSTR 1, that will be verified by the custom department from their data, and they will send the confirmation, and after confirming the particulars of both one, then only you can get the refund into your bank account. So that is the process when you paid the tax at the time of export. But if you didn't pay any tax at the time of export under rule number 96A, then you have to check out the rule number 96A, because you know that the GST Act give you the option that you can either pay the tax at the time of export, or you cannot pay the tax at the time of export and you get the refund of the input tax credit. So now you didn't pay the tax at the time of export, but you want the refund of the input tax credit, the refund of unutilized input tax credit. Now the procedure of refund is like this. So now first you have to fill the form GST RFD 11 along with the bond or letter of undertaking. But now the question is how to fill out the bond or the letter of undertaking, or what exactly is that. So we will discuss about that in the next clip. So first you have to file the form, which is the GST RFT 11 along with the bond or letter of undertaking. So that is the bond of letter undertaking in which you have bound yourself that if you don't export the goods, then you have to pay the tax under the CGST Act. We will discuss in the next clip. Then you have to file similarly the GSTR1 and GSTR3. Similar to that, table number 6 is regarding the export. You have to fill the export detail in GSTR1, and also GSTR3 you have to fill up the detail regarding the export. Then the form GST RFD 01. So because you want the input tax credit, you want the refund of input tax credit, so therefore you have to go through the normal rules which is regarding the refund rule. So in that case you have to first fill out the form GST RFD 01, and that form can only be filed only after your person in charge of conveyance has filed the export manifest or the export report under the Custom Act. So when that person, the person in charge of conveyance, have filed the export manifest or the export report, then only you can file the application in GST RFD 01, and with that application you have to accompany certain kind of a document which will be proof that yes, you have filed, you have exported or that good. So under the rule, GST rule, there is certain document list that which you need to accompany with the refund application in GST RFD 01. So the document is like the shipping bill or the invoice for export. So that's kind of a document there. But if you want the detail regarding that, you can mail, you can ask me on the mail. So you have to first fill out the form GST RFD 01, and you can only file that form after the export manifest or the export report of the person in charge of conveyance. And then you have to also accompany certain documentary evidence while filling out the form GST RFD 01, and then when you do that, then only your refund application will be due. And one more point, because that is the refund of the input tax credit, so also custom department will also cross verify the data which you provide in GSTR1 or GSTR3 with their data. So the similar process is there. The custom department will also cross verify the data in GSTR1, GSTR3 with their data. So when they find that it is perfectly correct or the synchronizing, the both the data is synchronizing, then only your refund will get reflected. So but that will not credit into your bank account directly, because in that case you have to file the GST RFD 01, and then documentary evidences is there. So therefore means that is a process that will reflect into a bank account, but you have to take the different path. In the first one there is no such form, filling out the form, because in that case the shipping bill was itself a refund application. So therefore when you pay the tax at the time of export, then you have to simply, you don't have to do anything, you just have to because simply the shipping bill will consider as a refund application, and you fill out or you file the return under GSTR3 and then GSTR1. They will automatically correlate the data in both the return with their data, and then refund will be available to you. But in that case where you file the bond or LUT, or you didn't pay the tax at the time of export, then you have to go through this procedure, which is you have to file first the GST RFD 01, and that can only file after export manifest, and then they will verify the data with your data, and then only your refund application can be processed. But one more point here is that at the time of getting the refund, 90% of the refund will be given provisionally to you, but that is not that is a separate thing. If you want to know also about it, then you can mail me. Alright, so in the next clip we will discuss about exactly what is the procedure or the circular under both CGST and the custom. Now we should discuss about what exactly is the actual procedure of exporting the goods or services also, in case you want to export the goods or services out of India. So before exporting the goods or services out of India without payment of tax, without payment of tax, you have to first file the form GST RFD 11, and in that form GST RFD 11 there is a two annexure. First one is the bond, second one is the letter of undertaking, bond or letter of undertaking or LUT. So you have to first fill the form GST RFD 11 for exporting the goods or services out of India without payment of duty. Remember that bond or letter of undertaking procedure is only for those one who wanted to export the goods or services without payment of tax. If you want to pay tax under GST for exporting goods out of India and then take the refund, then you have to check out, you have to fulfill the other thing, like for sending the goods out of India, you have to simply do the thing, seal your container, etc. And then for taking the refund of input tax credit, fill the form GST RFD 1, and then the custom department will cross check the refund claim, and then they will process it, and then you will claim the refund. But in case you didn't pay the tax at the time of export of goods or services, now you want the claim of the unutilized input tax credit. Now you have to first check out those conditions, and because you know, when you are supplying the goods or services and you are selling the goods or services to outside India, you know that there is GST applicable on them and you should pay the GST before export. But because the government has give you some exemption to not pay tax at the time of export, so therefore government will also check or making sure that you have exported the goods or services out of India. So for that safeguard and for protecting their interest, the government is now have their system to check out or to ensure that you do the export as per the legal way. So before exporting the goods or services without payment of duty, first one is that you have to fill the form GST RFD 11, and there is two annexure in that, bond and letter of undertaking. So letter of undertaking is for those people who are trustworthy, who has the track record, good track record, and those who has trust, the government has trust on them. So how to establish the trust? The government has three criteria. First one is that you can execute the letter of undertaking only if you are a status holder as specified under paragraph 2.3.2 and the 3.21 of Foreign Trade Policy 2015 to 2020. So that is the first one who can execute the letter of undertaking, that you are a status holder as specified in paragraph 3.2 and 3.21 of the Foreign Trade Policy, or you receive the due foreign inward remittance minimum of 10% of the turnover in the preceding financial year. So in the preceding financial year, you should at least get the due foreign inward remittance of 10% of the export turnover. So in the previous year, you have to check out that whatever was the due foreign inward remittance, you should at least get the 10% of the export turnover. And remember that 10% is there, but the actual amount, the amount should be at least the 1 crore rupees. So suppose you received the 50% of the foreign remittance in the preceding financial year of the export turnover, but the 50% is suppose the 50 lakh, then also you cannot execute the letter of undertaking, because you should at least get the amount of 1 crore rupees to execute the letter of undertaking. And also you should not be prosecuted under the CGST Act or under the earlier act, so that you can find the letter of undertaking. So as you can see, that letter of undertaking is for those people who are trustworthy. The government has trust in them, so therefore those persons who are trustworthy can file and execute the letter of undertaking. And if you execute the letter of undertaking, then it will be valid for 12 months from the date you execute the letter of undertaking. And also you have to execute the letter of undertaking in duplicate in a financial year, and also that undertaking can be printed on the letterhead of the company, and those person who will sign it, those person who are like the managing partner, managing director, company secretary, or the proprietor, they are the person who can execute or who can sign the letter of undertaking. So that, and the letter of undertaking is to the President of India. In that letter taking, the wording is like, I will export the good, and I will not export the goods, that I will make the payment of the taxes, and if the payment of taxes is still not correct or is insufficient, then my legal here will be liable to pay the tax of that amount. So that is a letter of undertaking which you need to file duplicate in the duplicate copy, and also on the letterhead, and that will be valid only for the 12 months, and that are the person who can execute the letter of undertaking, and it will be on the letterhead of the company. Now, who are the person required to furnish the bond? So those person who are ineligible to file or furnish the letter of undertaking is the person required to furnish the bond. So bond is for those person who are less trustworthy related to those person who are eligible to file the letter of undertaking. And in the previous clip we have seen that who are the person eligible for letter of undertaking is like those one who is the status holder, and those one who received a 10% of the inward remittance, but it should be at least the 1 crore rupees, or for those one who didn't prosecuted under the CGST Act or under the earlier law. So if you are a person who are not those person who are eligible to file the letter of undertaking, you have to furnish the bond, and the bond should be furnished in non-judicial stamp paper. So you have to furnish the bond in stamp paper. First point is that, and then the bond should cover the amount. Now the second question is, what exactly should be the amount of the bond? So the bond amount should be the tax liability of the export of goods or services. So suppose you are exporting the goods worth of 1 crore rupees, and the tax liability of that exported goods is like the 20 lakh rupees. So we know that the tax liability of that exported goods is 20 lakh rupees. So we should furnish the bond of value of 20 lakh rupees. And if the value of tax is greater than the value of the bond, then you have to also furnish the fresh bond, so that to cover up the liability which is arising on the export of that goods or services, so that the liability of tax is covered up with the value of the bond. So remember that. And one more question, whether you need to file the bond on every single export of goods or services. So the answer is no. In the clarification in the circular, there is it is clarified that the bond can be the running bond. Instead of filing the bond in every single transaction, you can file the running bond, but the fact is that the bond amount should be within the tax liability in respect of those exported goods or services. Remember that. And then in the rules also it is written that the bond should be accompanied by the bank guarantee. So there is also a bank guarantee clause in the form in which you want to, or you have to file the bond. So when you file the bond, you have to also file the bank guarantee. In the letter of undertaking, you don't need to file the bank guarantee, but if you because you are a person who are not less trustworthy, then you have to also file the bank guarantee, but the amount of bank guarantee will depend. So the jurisdictional commissioner has the power to decide the amount of bank guarantee, and if you have that good track record, you are trustworthy, then the bank guarantee is not needed, but that power is with the jurisdictional commissioner. So if jurisdictional commissioner find that you are trustworthy or you have the good track record, then there is no need to furnish the bank guarantee. But in other cases, you have to furnish the bank guarantee, and in any cases the bank guarantee cannot exceed, the value of bank guarantee cannot exceed the 15% of the bond value. So whatever will be the bond value, the bank guarantee should be a maximum of 15%. Maximum. The commissioner can say you that furnish the bank guarantee, but the bank guarantee amount cannot be greater than 15% of the bond value. And also both LUT and bond value can be filed manually. So you can furnish the bond or LUT manually till the system will develop. And also you have to furnish the LUT or the bond in Form GST RFD 11 to the jurisdictional assistant or jurisdictional deputy commissioner. So in the rule number 96A, it is mentioned that you have to furnish the bond or annuity to the jurisdictional commissioner, but the jurisdictional commissioner has now delegated that power to jurisdictional assistant or jurisdictional deputy commissioner. So instead of reading the rule number 96A, you should also read the circular in which the jurisdictional commissioner has delegated the power to furnish, to accept the bond or letter of credit or the letter of undertaking to the jurisdictional deputy or jurisdictional assistant commissioners. Revised procedure of sealing of container has also been prescribed under circular number 26 in the custom. So they have changed the process of sealing of container, but the revised procedure of sealing of container will applicable from 1st September 2017. From 1st September 2017, there will be a revised procedure of sealing of container, and the procedure is in line with the objective of the government or the scheme of the government, which is the ease of doing business. So because the government want to promote the ease of doing business and also the rank of India in terms of ease of doing business internationally, so therefore they have simplified, or you can say trust based environment for sealing of the container. So that revised scheme will applicable from 1st September 2017. So up to that you have to follow the same scheme for sealing of container, and the scheme is like on self sealing at the factory, and then sealing under the supervision of the central excise officer, or sealing at the container freight station or inland container depot. So there is a three prescribed scheme or method for sealing of container, but now there is a certain modification in the sealing of the container, so it's in line with the ease of doing business slogan of the government. And also the procedure of filing the ARE1 has now been dispensed with or now been abolished. So now the procedure is that you have to furnish the bond or letter of undertaking along with form GST RFD 11 when you are exporting your goods or services without payment of duty. Remember that the procedure of filing the bond or letter of undertaking is only when you want to export the goods or services without payment of IGST, without payment of tax under the GST. So that is the procedure only when you want to export without payment of duty. In case you want to pay the duty at the time of pay the tax at the time of export, then you don't need to file any bond or letter of undertaking or the form GST RFD 11. You just simply have to follow the normal procedure, and for refund you have to simply fill the form GST RFD 01, and along with that you have to also give the evidence proof of shipping bill or the invoice. And then finally the shipping bill format has also been changed. In that there is a column of GSTIN. So for every shipping bill you have to also mention your GSTIN there. So that was the complete procedure of how to do export under GST. So if you are satisfied, then leave the comment below, and if you have any query regarding the export under GST or the procedure under GST, procedure of export under GST, then you can mail me on sharwangst.148@gmail.com, sharwangst.148@gmail.com. I hope that all the content of this video will be very helpful for you, and I hope that you find it really cool, really interesting, and really knowledgeable video for you. I know that the length of the video is little longer, but you will gain a lot of knowledge after completely watching this video. So alright guys, so with this I want to end up this video, and there is also a special message for all the YouTuber, for all the subscriber of my channel, which I will discuss about it in the next or the next video or the coming videos. So alright guys, so we will meet in the next video. Till then, bye bye.
Can we keep each other company?